late August, September, October can typically be just on their own seasonally weak and difficult times in the market. So I think the sense is from most asset managers that while they're expecting it kind of later in the year, November, December. Now, if it happens in October, I don't think it's going to happen in September. I'd be very surprised if it happens in September, especially after what they're saying is that weaker CPI report today, which I think is also baloney because I don't think it was really weak at all. Prices are still rising. Yeah, we didn't get that pop that we did last year, but prices are still on year over year up 5.3%. And so prices are still rising, but they're going to use it saying, well, it wasn't worse than expected. So therefore, the Powell narrative about transitory is really real. Now, today or tomorrow for us, we're going to get the PPI. And so we're going to see what that says. If that is, in fact, in line the way CPI was, then I think that gives Powell a little bit of room to push it out. And I think the market's okay with that. If that comes in stronger and then it starts the argument about, OK, it's going to happen in September, October, then I think the market is not prepared for that time. And so therefore, I think it'll have a reaction. It is prepared for the tapering to begin, but I think it's preparing for November, December, not September, October. And that, I think, is a little bit of a wild card.
And so give us a scenario analysis, Kenny, good morning, thank you for joining in this conversation, in terms of how the markets would take to a surprise. Because like you said, and I believe that as well, that the Fed is going to play by the script. But if there's a surprise, then what happens?
So I think if there's a surprise, like you said in your opening statement, is that most analysts over here are expecting a pullback. I'm in the 7 to 10% range. Like, I'm dying for the market to correct by 7 to 10%, not because I want to see it go down, but because I want to put more money to work, right? I actually look at that as an opportunity. There are others that think, though, if we get hit with a surprise announcement, meaning it'll start sooner, then, you could be looking at a 10 to 15% correction because whatever happens is going to happen really quick. And then the market, again, in that seasonally weak period of time, will just feed on itself a little bit. But do I think you're going to see a 20 or 25% correction? No. I'm in the 7 to 10% range, and I'm sticking there. That's kind of where I think it's going to happen, because if it plays out the way I think it's going to play out, the tapering will start in November, December, and I think the market between now and then will just slowly readjust, and then we'll end up being down. They get hit with a surprise announcement, it could happen much quicker. Listen, if it happens quicker, that's okay, too. It's just going to create the opportunity that much faster.
And what are you going to buy in that fall, Kenny, when that fall comes?
So I tend to be, for the rest of this year and kind of into early next year, I'm playing the value side of the equation, right? So I like industrials, I like financials, I like energy, even though energy's gotten beaten up a little bit because, everyone's telling the story about how Delta is going to derail the global economy. I'm not in that camp at all. I think there's plenty of demand. So consumer staples, now they're not sexy and high growth and they're not tech, but in an environment where you're a little bit nervous, consumer staples do offer some stability. They're big, large UCAP. They're good dividend payers. They're solid companies. They've got pricing power. And so therefore, that's kind of where I'd go. Doesn't mean I'm giving up on tech at all. Not at all. It remains part of the portfolio. But if I was going to add the tech, I'd be very, very selective until I felt like the market has kind of made its move. And then I would look again at tech. But on the way down, if I'm going to be jumping in, it's going to be the industrials, it'll be the value names, it'll be consumer staples, it'll be financials and energy.
Sure.